Hello and welcome to Dinis Guarda Cities ABC YouTube podcast series. We are a fast-growing YouTube podcast, thought leadership channel focused on profiling global leading inspiring people. We highlight the ideas, products, inventions, software, books, and solutions to the multiple challenges and opportunities we face in our cities and nations with the advent of Society 5.0, fourth industrial revolution of AI, blockchain, fintech, IoT, and more. And as well, how can we enable a more innovative culture based on startup ecosystems, and as well a bit more focus on sustainability and improving a lot of the challenge we have when we face to the emergence of technologies and all the disruption that comes with it. This YouTube channel is distributed on citiesabc.com. That is as well the platform we created around this. And there's a new 4AR wiki platform for cities and citizens. And this is distributed as well in the other platforms, openbusinesscouncil.org, intelligenthq.com, and Spotify, Apple Podcasts, Google Podcasts, SoundCloud. And we're reaching right now around more than 10 million people per month, which we are very happy and working to make it bigger. So today we have with us William Bao Bean, which I'm quite excited to interview. So welcome to the podcast, William.
Thanks for having me. Really appreciate it.
So you have a fantastic CV and as well very geopolitical balance because you were grown up in the US and you are in China. So I'll read a bit of some of your highlights, which is impressive, but just some notes and then we start. So you are general partner of the company SOSV, the Accelerator VC, that is the second most active angel and seed stage investor in the world in 2019, with $700 million under management. And at SOSV, you are the Managing Director for the Chinaaccelerator, the first accelerator to launch in Asia, and the only accelerator in Asia to have a unicorn come through its program, Bitmex, the one crypto exchange in the world, by trading volume. And as well, you are the founder and Managing Director of MOX, and you joined SOSV from Singtel Innovate Ventures, where he was a founding managing director supporting China investments. And prior to this, you were being a partner at SoftBank China and India Holdings, and the venture capital firm backed by SoftBank and Cisco. And as well, you spent 11 years before in the equity research and analyst, and most recent with the Deutsche Bank, where William was a top-ranked analyst for Asia Internet and China Tech Media and Telecom, and work on IPOs for Alibaba, Kingsoft, and Elong. And as well, you've been as well working as a top 3 stock picker in China and Hong Kong for one and number 1 for technology, which is quite impressive. And this was something by Thomson Reuters Star Mine. And as well, we've been working a lot in equity research. So it's a big pleasure, William. I have a lot of questions for you. I'll try to keep it. But I think the first one is, and I always start with the basis. So starting as a Chinese, or at least an American Chinese, and all a mix, how do you define yourself, first of all? I think that's important for the global world we live. And how did you build this fantastic profile that took you from all the parts of the world, but working with different countries from the United States right now to China?
Yeah, so I grew up in the U.S. and I'm half Chinese and half Scottish. My parents' families both went to the U.S. quite early. So I look at myself as a bit of a bridge. Grew up now in the U.S., but now been in China for 25 years and 10 months. So I've actually lived in China, Greater China, longer than I lived in the U.S. So in terms of the career, I'm a technology analyst, both on the equity research side for 11 years, but now I'm focused on early stage venture capital. And for a long time, my role was to help global investors understand Asia, understand China, and understand technology. And I went from that role when I was explaining technology to other investors. And I just, what's Alibaba 2005, helping them with their first IPO, to moving over to the investment side myself. So I've been an investor now as a VC since March 2007. And what we're really focused on is helping early stage startups from around the world and Asia build their business up and then go cross-border to Asia. So we're helping companies from around the world enter some of the most competitive markets in the world: China, India, Southeast Asia, and even within Asia, go cross-border. So think about it from as a child. more like a bridge myself, being kind of half and half. And also through my career, where I am investing in companies from all around the world, but helping them bridge into the very fast growing, extremely competitive markets that are China, that are India, that are Indonesia.
I love Scotland and Chinese and American, which is three completely different countries and different as well ways of living and putting yourself. So before we go more deep in terms of your fantastic career and as well still in the beginning, so what would be, let's say, from your education, and you studied in the United States, but as well, like you said, with three major different cultures on the side, how did you manage this culture balance? And I think this is particularly interesting for people around the world that are struggling to understand all the geopolitics and all different things. And as well, right now you are based in China, which is of course the leading technology and powerhouse in the world, is passing the United States, whatever the US realizes or not. And I think everyone realizes in the world. So how do you see these kind of nuances in terms of culture, and how did you cope with this as you grew and you study as well, and with all this different background?
My mother grew up in China, but then spent most of her childhood in the US. My father, I mean, we're Scottish, but we left Scotland 300 years ago after we got our asses kicked by the English in a small war. So my family is on my father's side has been in North America for 300 years. Now, the challenge is that a lot of people come with baggage, right? They have 10,000 hours worth of experience to become an expert in something. They are of enough culture. As with startup, so is culture. So when you're doing a startup, you're doing something that you've never done before. You do not have, 10,000 hours of experience. You don't have 10,000 hours of failure. You're doing something that's never been done before. And so you're going to fail, just like a child, learns how to walk. They're going to fail. They're going to fall over. And so we take this sort of startup approach where you fail and then you fail again and then you fail again, but then you learn. Well, going into a new culture, going into a new market is the same thing. You need to leave your baggage behind. You need to leave your experience behind, because your gut instinct, whether it's developed in, say, Belgium or New York City, your gut instinct when you come to China or when you go to Bangalore or where you go to, Delhi, your gut instinct is probably going to send you in the wrong direction, right? Because it's built on experience, on mistakes in one culture. But when you apply it to another culture, it just simply doesn't work the same way. So if you take what's called a lean startup approach, where you experiment, you throw things out there, and then you actually look at the data, and you take your preconceptions or your experience and you put them aside, then it becomes a lot easier to go cross-border, to go into new markets, to attack new problems with solutions, because you are getting data from the source as opposed to coming in with whatever you came with before. So, a lot of people in Silicon Valley, we call them navel gazers. They think Silicon Valley is the center of the earth and whatever comes out of there is the best. But a lot of times what comes out of Silicon Valley is good for Silicon Valley or is good for America. But when you take it to China, you take it to Asia, it fails. The reason why is because it's solving a problem that doesn't exist over here. So the best way to understand a new culture is to go in and jump in and actually just throw things out there and see how the culture, the customers, the people, the consumers respond to it, measure it, okay, and then keep on iterating. And that's what we do, me personally. That's what we do with the startups that we work with. We've advised companies from LinkedIn to Evernote to Airbnb as they come in. Our main bread and butter, though, is we invest in startups and help them enter the market and build businesses here. And this is a market like China, where I am now in Shanghai. Google got their asses kicked. Facebook, Amazon, Toast. So how can a startup come in and succeed where these giants have all failed? It's by understanding the local culture, understanding what works and what doesn't work, and listening to data and not your gut instinct.
Yeah, this is key, and I think it's particularly interesting for your profile and I think your career. So you start as an analyst and you work with Deutsche Bank and a lot of very high-profile investment firms, and of course SoftBank, which one of the biggest investment platforms in the planet. So that career, of course, gave you a huge wealth of experience. And actually, what is interesting is SoftBank, for instance, an example, is American. Sorry, it's Japanese, but it's very global. And I think it's one of the things I admire, for instance, in SoftBank. I would like to start that because being, like you said, a bridge between different cultures, but as well being studying the United States and then coming back to China. And like you said, the world business right now is global. But we have a massive perception right now in terms of geopolitics and different things. So how do you cope? Because, for instance, China is right now is becoming the biggest economy in the planet by far. And as well, even these awards from Eric Schmidt, it's 1 decade away from most of the world economy and most of the world technology. And this is words of Eric Schmidt, not mine. So how do you cope with that, especially with the as right now someone from your career highlights, let's say from an analyst that became an investor and as well managing a lot of companies?
So basically, think about it like bubbles. Right now we have COVID, right? COVID's a real pain in the butt. So we have COVID, and people are talking about bubbles. You create a bubble with your family. You create a bubble within your school. You're creating a bubble within a country like China. And hopefully there'll be corridors where you have several countries and cities that are sort of COVID free, and they can create a bubble within each other. Well, one thing that we have right now is we have legal and we have internet bubbles. So you had who kicked it off? China's been an internet bubble. They have their own laws here in China, and China internet is not actually the same as internet everywhere else. You can think about it like a bubble. So inside the bubble, everything works. When you try and go from one China bubble to outside, it doesn't work that well. Okay, and then what happened next is we got Gdpr Europe. So we got the Euro bubble. They put in a bunch of laws, and then European internet is now different than everybody else's internet. And then more recently, we had a bit of a US bubble where people want to, without changing laws, make some changes and almost like cut off US and make US kind of a bubble. We've also seen something similar happen in India recently, where India is saying like, okay, we're going to also by law have our own internet, which is going to be different than the rest. So what we're ending up with is not just COVID bubbles, we're ending up with internet bubbles. Now, our challenge here, because we focus at SOSV and through our Chinaaccelerator and MOX platforms, is we're here to poke holes in the bubble. Like, we've been helping global startups and companies enter into the China bubble, for the last decade. And we've gotten, especially over the last 6 years, since I went full-time, we've gotten pretty good at popping and making holes under the bubble, through the bubble, over the bubble, like penetrating the bubble. But now the world probably needs us more than ever before, because these barriers are going up between the different markets in the world. And you cannot ignore the number 2 economy, China. Number 2 economy in the world. You cannot ignore Europe. You cannot ignore India. You cannot ignore US. And so people like us who are in the business of building bridges, who are big fans of globalization, who are trying to break down barriers, are in a tough spot right now, because we have a huge challenge, where the barriers are coming back up. And before, it was a lot easier, but now we've got a much tougher time popping those bubbles, or we're not going to pop the bubbles, penetrating the bubbles and creating bridges, creating entryways where companies can thrive. And it's a major problem for innovation, because when everything is open, innovation flourishes. But when everybody's stuck in their own bubbles, we end up with 4 versions of everything. There's a lot of wasted effort. And our role as a venture capital firm, and also as a cross-border focused accelerator platform, is to break down those barriers and make it possible for amazing entrepreneurs to bring their creations not just to one bubble, but to the entire world.
Yeah, this is, I completely hear you and respect these words. It's nevertheless very complex, and I think it's going to be more complex before probably it goes better. So one question I want is, and going to your career right now. So From your experience working with the likes of Deutsche Bank and SoftBank and some of the biggest equity and investment houses and banking in the world, what would be the takeaway from this part of the corporate world, and then moving to the startup world where you are building not only some unicorns, and I want to touch, of course, a bit Bitmex as well, building an entire ecosystem that is key, because in the end of the day, it's building ecosystems that flourish. If you look at the success of SoftBank, is probably in one or two successes, there were like 100 failures, and as well the continuation of innovation and flourishing and even breakthrough for things that most of the people think in 10 years or 20 years ahead. So what would be from the analyst, and let's say your career started as a very conventional analyst, not conventional, but very high profile analyst, and then moving completely radical from the corporate to the startup world. How do you see these two worlds, and as well some highlights in your career?
I would say, one of the most amazing things is trying to help people from around the world, investors, understand China. And this is back in 2005, 2006, when I was working with Jack Ma and Jotai and Savio, who was like the head of culture, and John Chi, who was head of IR, to try and help bring Alibaba public. And one of the most amazing things about Alibaba is their original business model, which is B2B, was solving a problem of that time. The Alibaba and the Ant Financial you see today has almost nothing to do with the company that we took public, or I helped to take public way back in 2005, 2006. But the problem oftentimes remains the same. How do you understand a market that you're not familiar with? How do you understand a business model that you do not see in your home market? How do you invest in something without being able to visit it? It's a problem we have with COVID today. How do people write checks when they can't actually sit down and have a coffee with somebody? It's very difficult. So from that experience, I saw, a lot of people make a huge amount of money. And the one thing about being the top ranked analyst in China and Hong Kong is that you're the top ranked analyst in China and Hong Kong, and I got bored. And so I took a 75% pay cut to do venture capital. My family was not too happy because it took me about 10 years to start making money again. Maybe because when I went to VC, I did not know what the hell I was doing. And so I had to learn, and it was a very painful experience. I did 2 startups. The first one failed. The second one actually ended up having the chance for success, but also failed. So going through that process, the same as any early stage entrepreneur, really gave me the tools and the fortitude and basically we call it cockroach approach, but basically the ability to take a few hits, lose a leg or two, and keep on going. Resilience in early stage and resilience in this market is what's really, really, really important. And so that was a journey. I can't say it wasn't painful, but I learned a lot. And we got better over time, right? So the companies I invested in at SoftBank, some of them did okay. The companies I invested in when I was at Singtel, which was a corporate VC fund, was one of the 3 founding MDs, 2010 to 2014, we did better. In those 6 years since I joined SOSV running cross-border internet with my partner Oscar, we're taking it up to another level and really doing quite well now. And we've got a unicorn here or there, although they're having trouble with their legal bubbles. Bitmex has tried to stay out of in the global bubble, but the US bubble keeps on seems to be attacking them. So that's a fun one for another day. But the challenge of moving from kind of a traditional career where you work in a bank and you wear a suit and you do the same thing day in, day out, and then you jump off the cliff, do something completely different, something that you're not necessarily prepared for. It's both painful, but it's extremely exciting. And I really encourage anybody out there who is thinking about being an entrepreneur, to give it a shot. I mean, you don't want to jump blind. You want to jump based on data. You want to jump based on hard work. You want to jump based on not just doing it by yourself, doing it with co-founders. And I mean, we run accelerators because it's really hard to jump off a cliff unless you've got that support system and people ready to catch you. But it's very important to make that jump if you really feel the passion and desire to do so, because you only get one life. So you might as well live it to the fullest.
I love that, and it at least is my mottos. So one thing before we go to SOSV. So in terms of, let's say, you mentioned Alibaba. Alibaba is right now becoming probably one of the first companies in the planet. And I think if you actually see it from Western world, from taking all the politics, it's probably already one of the biggest. You took it public, okay? And when you took it public, you had money from SoftBank. You well taking it public.
I left before the actual IPO, but you know, semantics. I
Yes.
went before the actual IPO, so I didn't. I prepared for it, but I didn't actually have to do the work.
Yeah, I understand. No, but you were involved, so that's what I think it's key here. So that experience, I think I want to touch that as making a parallel as when the time that happened and now. Let's say this was just kind of like a couple of years ago, but that shows that in a couple of years ago, China became from being one of the, let's say 10 years ago, was a very poor economy with a lot of issues, and right now 10 years after is the powerhouse in the world with a decade of evolution ahead of the rest of the world. So that experience with Alibaba, and I think especially you coming from America, I'm sure there was an interesting contrast, let's put it that way. And as well, like you said, Silicon Valley is this centric that they are at the top of the world, and they're forgetting the rest. That is, the world is much bigger than just Silicon Valley in the US. So I would be that experience in particular. I think that is interesting for the people listening to us, and especially, of course, like you said, Alibaba and then financial independent of how you like it, the innovation has been massive. The business has been massive as well, the number of users, and as well, all the change they did in the world. Let's be honest, in a lot of ways, Alibaba has been changing much more than Amazon. Although Amazon might be more valuable from a Western perspective, but there's a lot of different things that sometimes the mainstream doesn't see. I would like just to touch that from your experience with that particular case study.
Think about history. You know, I'm not a technologist. I'm not an engineer. I actually studied history in my undergrad, and so you have a lot of history in the U.S. and North America and Western Europe. Well, by what I mean by that is you have, you know, 100+ years of retail history. There are stores. There's Macy's. There's you know, there's a H&M. There's like a long history of, just say, retail. So what happens with e-commerce? Well, when you come to a country like China, they have like 20 years of retail history. They had a long history before the communists came, but then that went away. And then just over the last 15, 18 years, they have retail. Now, what you get when you bring technology to this is the ability to leapfrog. So a lot of people in America or North America or Western Europe, they have this image in their minds of emerging markets or developing markets, and they look at everybody's income and it's like, oh, they're only making $8,000 a family, or in India they're only making $1,000 a family. We're so far ahead of them. But the thing that they don't understand, and it's quite amazing, is that they also don't have the 150 years of baggage. So they can take technology like a smartphone and they can leapfrog. Such that you've got 25-30% of all consumption in China happening online and through e-commerce versus 10 to 15% in the US. You move much faster because you do not have all that infrastructure. You don't have that baggage. And so that's what we saw in the 15 years since Alibaba, were getting ready for their first IPO to now. China is 15 to 20 times larger than the US in terms of mobile e-wallet usage. 15 to 20 times larger. So the last time I checked the numbers, US was 50 billion a year in mobile e-wallet. China's 12.5 trillion a year, and that was like 2 or 3 years ago. Now it's even greater. So so the adoption of technology is really what matters, I think. And so the opportunities here become interesting because you have China, you have US, but what about the rest of the world, and whose model are they going to follow? Are people going to follow the US or Western Europe model? Whenever I go to the Western Europe, it's like going back in history because people are still using SMS. It's funny. If you look at WhatsApp, it's like everybody's like, oh, I love WhatsApp, but it's a user interface. It's a piece of crap. So if you want to look to sort of like the future, sometimes you have to look to those emerging markets and what we call mobile first markets or mobile only markets, where people's only access to the internet is on a mobile phone. Their first access to the internet is on a mobile phone, and everything is basically mobile centric, and all commerce, all business, all education, everything really happens on the phone. It sounds like the future. Living here is a little bit like living in the future. And I think that people who live in other markets and other cities and other countries could do well by spending a little bit more time, not just listening to the media hype and the bullshit about who's going to win the war, who's going to win the race. That doesn't matter, but just try and understand how other people use technology and how that might influence the way the rest of the world over time uses technology.
Going right now to SOSV, the company that you're leading as well. So you have at the moment 900 plus portfolio companies, 150 new startups per year, 100 plus mentors. It's quite impressive numbers. Do you want to tell us about how the company was created? What are the goals, where people can find information and so forth?
Sure. So SOSV is a rebrand. Our founder's name is Sean, and his last name is O'Sullivan. But SOS means help me. And so we just call it SOSV. Sean is an engineer, not like me. He was a visionary, or he is a visionary, but he was a visionary in college. So if you have a box and you type an address into that box and it shows up as a dot on the map, in 1986, he invented that. He and his three friends, went public on the NASDAQ, sold it for 400 million. And that was the basis for SOSV. He put half of the money that he got into a foundation for charity, and charity and giving back is very important and core to what we do. But he also put money into a fund for investing. And it started off as his own angel investing. He grew to $400+ million. And then in order to continue to support that, we started to take outside money and brought in outside managers like myself. So I joined in 2014, and we are able to do something unique in venture capital, which is innovation. The funny thing about VC is VC invests in innovation, but there has not been innovation in VC since it started. And the reason for that is that the limited partners who give the money to the general partners have this feeling that they need to control. So they want to decide, oh, I want to invest in China. I want to invest in Europe. I want to invest in South America. I want to invest only in hardware. I only want to invest in biotech. I want to invest in internet only. I want to invest in, you just name it. And we think that really ignores the progress that we've seen over the last 70 years, where you can't put technology or geography or innovation into a bucket. So we've been able to innovate such that the 8 partners in our fund can invest globally. Okay. The second innovation is that we have multiple verticals in one fund. No fund in the world is like us. We have hardware, we have biotech, we have food tech and ag tech, and Oscar and I run internet and software. And we are the most active investors in each of these categories. And now we're the #1 most active VC in the world as of second quarter of this year, according to PitchBook. And we think that diversity gives us an unfair advantage when it comes to investing, because we as the #1 most active investor in health right now, we have health biotech, we have health therapeutics, we have health food, we have health hardware and medical devices, and we also have health, internet, and telemedicine all under one house. And this would not be possible without having the ability to do what we're doing, which is break the traditional LP rules. And then the last thing is we're early stage. You know, we're not writing, 10, 20, we're not writing SoftBank size checks, right? We're early stage. We invested 100K, 200K. We help young companies, not necessarily young entrepreneurs, but young companies go from idea to product to market to scale. And we do that by using something called an accelerator. And most people around the world might know what an accelerator is, but the traditional money people, they don't really see that there's success in accelerators. For us, we're a VC. We've always been a VC. And the way that we deliver value to the startups that we invest in is through a set framework with mentors, with resources, because when you're doing something that's never been done before, it's very important to have people around you to support you. It's very tough to continually fail and smack your head against the wall when you're by yourself. It's very tough to build a brand new drug if you don't have a $5 million lab that's available to you without having to spend 40% of your time writing applications for money for grants, right? So we build a structure and a platform that allow amazing people to become entrepreneurs, to take their ideas and turn them into reality. So that's kind of like the pitch. But what we do is quite unique in the world because of Sean's vision and because we've been allowed to innovate in a VC space, venture capital, that's not seen innovation since it started 70, 80 years ago.
It's interesting as well, the variety of the different areas that you're doing, and as well, all the multiplicity of being as well in China, but as well having a very international background. So I want to touch that part as well. And I know that you own as well Chinaaccelerator and as well the mobile MOX. So do you want to just contextualize, first of all, how do you deal with all the challenges with geopolitics? And I think I want to touch that because it's really a big, crazy thing right now. And this is actually mostly only happened in the last couple of months, so 1 year. Because before that, I think everyone knew that you had to be, but now it's becoming a bit crazy, where we have really people afraid of things and going to some extremes. There are some, in some cases, ridiculous. But we have to demystify that. So probably demystify that, and then, of course, look at your fantastic achievements in different areas of the company.
Fantastic takes time. Just remember, we invest in early stage companies. Our fund, we're long-term. It's 10 years plus 3. I started doing this in March of 2007 after I left Deutsche Bank. And I just started to make money like a couple of years ago, just 2 years ago. Success takes time. But in terms of what you just mentioned, geopolitics and all the different bubbles, our job is to help great entrepreneurs bring their innovations to the world, make the world a better place. Our job is not to get involved in politics. Our job is not to take a view on who's right and who's wrong. Our job is to help make the world a better place in terms of using technology, especially deep technology, whether it be blockchain or CRISPR or AI. And we're the leading investor in these 3 areas in the world, bringing technology to solve fundamental problems for the planet, not just one of these bubbles, okay? So frankly, I don't really, talk about politics, and it's not relevant to what we do here. And it actually just gets in the way of what we really focus on, which is trying to make sure that our entrepreneurs can do what they do. And, from being at with cellular agriculture, cutting the amount of water required to create food for the earth, to what we do with coffee farmers, where we allow them to get to market without having to go to 8 different middlemen. And so that the people who want to pay $2 for a nice cup of coffee can actually know with surety, because it's based on a blockchain, that coffee bean that's in their coffee cup came from that farmer in Colombia, and that we can track that whole entire chain. I mean, we're bringing technology to solve problems. We're not trying to solve the problems of politics. So yes, it's complicated, but it's not our role. We can't be a commercial bridge, especially me being here in Shanghai. If we're trying to be some sort of political bridge, I'll leave that to our brothers and sisters who do their yeoman work in the diplomatic court.
So in terms of the achievements of SOSV, so what would be the main areas? And I know that, for instance, we touch Bitmex, that is right now, at least at this day, not in the best moment, but you have a lot of other things. I don't want to talk as well about the negative. Let's talk about the positive things, because I'm sure you have with 900 companies in the portfolio. Let's focus on the good ones. So and as well, what would be the highlights that you have?
I can't speak to the current situation at Bitmex, but when we invested in the company, we were investing in a company that was using technology to open the ability to invest in financial products. And when we first started off, we were looking at an S&P 500 ETF derivative, right? So an S&P 500 ETF is basically, according to Warren Buffett, one of the best investment products in the world, right? It goes up at least over a 10-year period very well. We wanted to make that possible for somebody with a smartphone in Indonesia to put $5 in so that they can save for their child's future. Okay, that was the vision. And then, of course, we have the bubbles. You have to abide by the law of the countries in which you operate in. And it's the same with the US, it's the same with China, it's the same with every nation. And so the vision, though, was to break down barriers and allow people who might have a smartphone and might have money, but they don't have a bank account, they don't have a credit card, they don't have like a Fidelity or a Vanguard account, to get access to financial services. And that's the vision. And hopefully over time, that will continue to happen. But in terms of what we're doing now, and this is also a bit controversial, in that I am not really into big internet, okay? I mean, just because you have like these company, corporate, like the legal bubbles, in the same way, we also have company bubbles, right? You have Amazon as a bubble. You have Google and Google family as a bubble. You have Facebook as a bubble. You even have Apple as a rich person's bubble. You have Alibaba, you have Tencent bubble. You have lots of different bubbles, and they're trying to create these super app ecosystems. Now, the problem is that those bubbles kill innovation, in my view. And as an early stage investor, we run across amazing entrepreneurs building amazing products, and they put their products out there in one bubble or another, and it doesn't matter how good they are. It doesn't matter how much people love them. It does not matter that they solve a problem that could save the world, or at least, save people some time, or at least maybe entertain some kid for 20 minutes while they're waiting for the bus. Because based on the way big internet is structured, no one will ever see their products, especially in North America and the West and outside of China, unless you pay money. It's a pay-to-play market, right? And Google, Facebook, they control 85–90% of the global mobile ad market. So the people who have the advertising space, they make this much. The people who want to buy the advertising space, they pay this much, right? And then what's in the middle? Well, that's $1 trillion plus in market cap for Google and Facebook. And I don't blame anybody for having a business model, but hopefully they don't blame me for trying to screw it up. So our role here is to identify everybody who is getting pressure from Google, Facebook, Amazon, Ali, Tencent, all these big internet. And we try and partner with them. So it's who's getting pressure? Banks, retail chains, shopping malls, TV stations, You even have like, not just the real estate companies, you have the brands, you even have food chains, right? You have telcos, handset brands, white good brands. Basically, traditional industry is under a huge amount of pressure from big internet. And they should be, because they didn't innovate. So what we're doing with Mox, our mobile accelerator, is we're investing in all of the different services that when you turn on your phone, you find on the first page, right? And we invest in companies, the best of the best from around the world, because no one else is investing in these companies, because they don't really make any money. They have to pay this much advertising to make this much revenue. It doesn't matter. So we invest in all the apps, and then we partner with banks or telcos or smartphone brands, and we give them a trade. They have users, they have trust. We have products that don't make lots of money, but do make money. And advertising doesn't make anybody money. So if you, the bank, or if you, the cell phone brand, or if you, the TV station, or if you, the shopping mall, promote our apps for free, we will give you revenue share long term. And we're going back to barter. Remember, if you ever studied economics, we're going back to the barter system, but it's a little bit more advanced. So you promote us, you give us users, and in return, we'll give you revenue share. And we just cut out big internet. Now, 5 years ago, I started to do this. 5 years later, we got about like 50, 60 million monthly active. For our Mox users are the apps that we've invested in. And the key thing is that the customer acquisition cost has been zero. Think about it like we're not a platform, we're completely decentralized. It's a mutual support group, and it's double opt-in, which means that nobody has to promote anybody else. Nobody has to take promotion and give revenue share. It's basically an ecosystem that survives on mutual benefit. And the only people who don't benefit is big internet, because we're cutting them out. Now, I don't have billions of dollars. I'm writing really small checks. I'm writing 150K checks. But we had a company last June, they had 0 users, 0 revenue, but some amazing technology that where you put traffic in with good content, they're using a chat bot and AI to help convert to sales, right? So we invested June. By November, we introduced them to some of our partners. By November, they had 24 million users, and they were doing over 500,000 a month in sales. And our check was 150K. And by January, they had more than tripled that sales, and they're up to 40 million users. Again, with no advertising, with no customer acquisition cost. So what we're trying to do here is change fundamentally the way that the internet works, so that there is a chance for innovation to happen, so that there's a chance for small entrepreneurs who've got amazing technology to be able to bubble to the top and have a chance. So we look at it as the grandmaster plan to make sure that nobody dominates the world. The movies always like the grandmaster plan for global domination. Well, this is a little bit like that, but it's a grandmaster plan for making sure nobody takes over. We're 5 years in. We got another 5 years to go. After that, I think I might be burned out. But that's what we're spending our time on. We've got 60 million monthly active users on the platform now. And we are finally getting some very large companies to support us, because they don't have a choice. The big guys are going to just take them out.
This is a vision of decentralization, which is, of course, the vision of crypto, the positive vision of crypto. How do you see this kind of vision associated with blockchain inception, and as well with all the crypto, digital currencies, and digital economy? Let's put it that way.
I'm a history government double major, but I took some economics, and we were the #4 most active VC in blockchain, and it wasn't my colleagues. So I got my Bildel t-shirt, SOSV, right? Half the crap I didn't understand. I've never invested in a protocol because I'm a history government double major who took an econ class. I'm sorry. I mean, I kind of understand markets a bit. And I spent 11 years in equity research, and you know, I studied a little bit here and there. Like most of these markets don't require a token to make them work. Now, some of them do. Okay, so but I wouldn't say I'm not smart enough, but it's not my area of expertise. Therefore, I passed. What did I do? I did blockchain fintechs. How do you take, now they call it DeFi, but basically, how do you take you know, a new technology and open it up for everybody? And that's what we did with Bitmex. And then you know, America didn't want to play ball. It's okay. We shut off all the accounts as far, well, not we, since I actually have no control over what they do. But they, according to what they say on their website, made it impossible for anybody from any jurisdiction where what they were doing was not in accordance with law to stop. You know, and that's the truth. I really don't know. You know, so. But we did it with a number of other investments, right? We're trying to open up financial services to low income, medium income, you know, people who are making $250 a month in total salary in India have a smartphone now. And that's a big game changer. So we're trying to use technology to open things up. And so we're, most of the other 35 investments I did in blockchain, we're really focused on bringing blockchain transparency, security, and trust to large corporate. Why? Because I'm boring, and you know, we like investing in things that make money, and blockchain transparency, security, and trust probably will have the first chance of making money in corporates. I could be wrong. But we invested in a number of companies there. Now, the interesting thing is, starting Q4 last year, and I'm big into timing. So about a year ago, I took a break. So I did blockchain fintech 2015, 2016, DeFi, whatever you want to call it. And then about a year ago, I did 4 more blockchain fintech investments, because now I think it's time for products. So far, so good. I mean, Covario, I was ex Deutsche Bank, Bank of America Securities. It is a traditional, super traditional prime brokerage, not like Tagomi or all the other guys who got Aqua hired out for like pennies on the dollar, but they are traditional prime brokerage, basically helping traditional hedge funds and money managers take advantage of the volatility in crypto and enabling them to do full, you know, license, KYC appropriate trading of crypto, and they're doing extremely well. There's Switzerland and Hong Kong. We have another company called TabTrader, which is also quite interesting in that there's a lot of consumers and they have one phone, but they have 5 crypto exchange accounts, which means they have 5 different apps on their phone and on which to trade. Now, the problem with that is, like, it's, you know, it's a pain in the ass. So TabTrader allows them to have one interface, trade off of their 5, 6, 7, 8 accounts through one interface. We don't touch any crypto, or, you know, TabTrader doesn't touch any crypto at all. We're just a software company. You know, our users have over 3 billion US under AUM, and that can be kind of useful, even though we're a software company and touch no crypto ever. So these are, and the last one is Vega X. You know, it's an amazing space. I don't know whether they're going to be a winner, but you look at the Fidelities, you look at you know, the Black Rocks, Vanguard. You know, Jack Bogle, I met him a couple of times. He's the founder of Vanguard. I actually studied math in high school in Bogle Hall at Blair Academy in New Jersey, and he revolutionized turning the stock market into something that's a product that everyday people can buy and make money on without a lot of fees. For Vega X, we're trying to do the same thing. It's just basically a nice product where you can get exposure to crypto without having to deal with the massive volatility and keeping track of all the different accounts. We're trying to turn it into a product just like an S&P ETF. And so, you know, early stage is a crazy place. We're not part of the herd, because the herd, they're like sheep. Wherever they travel, they eat all the grass, it turns to brown, it all dies. And at the end of the season, the sheep either get shorn or slaughtered. We're kind of crazy. We're out in front trying to do things that are a bit early, a bit different. And one of the things that allows us to do this is that we invest in so many companies. So we are allowed to make mistakes. We're allowed to have errors. So hopefully, you know, this philosophy is interesting and useful, and really appreciate the time that you've given me today to explain who SOSV is, Chinaaccelerator and Mox, and our approach to investing.
So last question, and I want to touch your hat as historian. And I love that, to be honest, I respect most of what you said, because although I've been in crypto and blockchain, I think we need, and she's the first person I interviewed that is very blunt, honest about that. And I think we need that, because there's a lot of, for instance, right now we have all this craziness about DeFi and all these massive gains. And for me, that is kind of all rubbish, because in the end of the day, someone will pay the consequences. Normally are always the same people. But let's not go on that. So my question is, and I think more positive, and I like the approach you've been telling, which I think we need that. We need a bit down-to-earth approach towards business, especially with COVID. There's millions of people right now losing jobs. And like you said, most of the world population lives under $500 per month, or even 200 or less. So as someone that comes from history and investment as well, because investment, especially as an equity analyst, you need to do a huge amount of research. You need to look at the numbers, financial numbers. So we have two things that are really very missing in the startup world, because there's this, like you said, let's change the world, let's be the next Google, and then we create another dystopian stuff. So how do you see this kind of, especially in the work you're doing with the young startups and with all these companies that we invest, how do you approach, first of all, the philosophy and the ethics as well, but as well the sense of history? Because I think it's really important, and I think that's why China did this leapfrog. And actually Asia is right now taking over again, because it has a sense of history that is not just thinking about my backyard and my own belly. So I would like to hear your opinion, and probably as the last question, because I think it's key for as well for our audience and for our context.
So there's like 4 questions in there. I'll try and pick.
Sorry, my questions are all a bit mind.
So we're early stage investors, right? And the problem, I used to be a stock analyst, and you get numbers, you get spreadsheets, and you know, you can believe them or not believe them. Who cares? You know, luck and coffee, you know, they're all fake. Most of them are fake. But when you're dealing with early stage startups, investing, there are no numbers. You know, there's very little to go on. You're investing in people. You're investing in basically a problem that they're passionate about. Okay, and then there's a third thing which most people don't pay too much attention to, but for me it's very important. There's timing, because sometimes it's just not the right time to invest in things. And so we have an approach that is very different than others. It is the most labor intensive or mind intensive way of investing, in that we get to know the companies that we work with. We meet them, we talk to them on the phone, we go out for a beer, whatever. You know, all the things that you do when you're trying to invest in a company whose product barely exists, where the revenues are this big, and then, you know, it's like, and there's like 1,000 beta users, but they're beta users, right? That's not what you would call data. There's no P&L, there's no balance sheet. There's like, if they did have a P&L and balance sheet, you would want to invest, because they're spending money on time on something that doesn't matter. So what do? We invest a small amount of money. Okay, we spend time together, we invest a small amount of money, and then we live together. Now, when I say we live together, we don't like sleep together, but if you can see behind me, this is not like the nicest office in the world, where anchor tenant in the first co-working space in Shanghai, People Squared. They have 40 places across China now, but it's not, it's not like super fancy over here. Those are the companies behind me that are still alive, but we have something that's called a Phoenix. It's a weird thing, and we made up a name for it, and it's on our t-shirts for our 10-year anniversary. But we've invested in a lot of companies, and we've had, a lot of companies die, which is normal. But we do have a community, and there are actually, so what happens, a company dies, shit happens, whatever. But, we people who are entrepreneurs, and it's like a bug. You do one startup, okay, my company died, okay, it happened, I'm going to do another company. Our 400 mentors plus mentors, they're serial entrepreneurs. They can't really give it up, and it is to some extent a lifestyle and a bug. We have this strange thing where 9 of the founders, after the company that we invested in died, they started a new company, sometimes on their own, sometimes with the same co-founder, sometimes with different co-founders. And they gave us free equity without us investing in the new company, just so that they could remain part of the SOSV Chinaaccelerator MOX community, because they thought that added value. And we call that a Phoenix event. And it's because it's ashes, but it rises up. And we really believe that, it's hard enough to do startup. But if you can do that within a group, if you can do that within a community, and if you can do that with the support of other people who have done it before, you have a much higher chance of success. And so that's the end of my pitch. Cheers.
Cheers, Noah. Fantastic. And I love that part, the sense of ecosystem and community, which I think is lost partly in the startup, more aggressive world. So, William, it's been a huge pleasure. We're going to be, well, there's a lot of questions, but I think 1 hour is already a lot. So we're going to put all the links to SOSV. I want to thank you for your honest and very, I would say, very kind of sincere things that we need in the startup world. I think we need that honesty, and I think that frankness, and as well the sense of community, because in the end of the day, we need to create value for our communities, and it starts with the people close to us. We cannot just think about, let's change all the problems in the world, but then we'll let the rest rot. So I think it's very important. Thank you so much, William.
Thank you so much for the time. We really appreciate it. Thank you so much.